in our countries, Chile, Colombia, Mexico, and Peru. And today, we had been, just a few minutes ago, at the New York Stock Exchange, ringing the bell for the first time about the Pacific Alliance. This means the opening of the financial integration that is led by the finance ministers of the Pacific Alliance. And we are with them. So please welcome the finance minister of the Pacific Alliance with a charm applause. I will let the president of IDB, Inter-American Development Bank, to start with the first panel. Mr. Moreno, please.
Well, thank you very much, and good morning to everybody. It's a privilege and an honor to be with the ministers of the Pacific Alliance here this morning with you. As you all know well, the Pacific Alliance seeks to basically create a deep integration that is more progressively towards the free movements of goods, of services, of capital, and of people. Now, we all know the global context and many of the region's short and long-term challenges, but there's also an opportunity, a very clear opportunity of what the Pacific Alliance countries stand in this world where everybody talks down on emerging markets. There are emerging markets and there are emerging markets, and I'm sure that as you finish this conversation today with the ministers, you'll see clearly that this is a set of countries that, despite the challenges that are in front of them, they know very well what's the way forward. During the past summit that took place in Paracas in July in Peru, the presidents tasked the ministers for finance to be a very important element of what they consider are the challenges going forward. So I'd like to first begin with the obvious. And it's a question that I think all of you, I'm sure, want to hear, and that is, how are each and every one of these countries facing the downturn that we all know and the headwinds that exist in the global market, with changes in the value of the dollar, as we have seen, equally changes in commodity prices, and the anticipation of increased interest rates. So I'll start with Minister Segura, who currently, as you know, Peru is currently chairing and coordinating the Alliance for the Pacific, and perhaps he can walk you through some of the challenges that he sees for Peru and how they're facing them. Minister Segura.
Thank you, Luis Alberto. Thank you all for coming here this morning. Mauricio, Fernando, Alejandro, thanks for coming today. Well, I think clearly what's happening externally, the downturn in China, commodity prices, the drop in commodity prices, which has been sustained over the past few years, what's going to happen with the Federal Reserve, I guess, tightening later this year. It all has an effect in Latin America, and particularly in countries that are commodity exporting. What have we done? We have implemented policy responses, I would say, to facing them in two horizons, short-term and medium-term, over the medium term. I mean, in short term, of course, you have to have a fiscal response, but that depends as well on how much fiscal space you have. In the case of Peru, we have ample fiscal space. We have gross debt to GDP at standing at about 20%. I think only Chile has a lower ratio of public debt to GDP than us. And we had also, in terms of flows, some space. We were basically a country with a balanced budget, so we run into deficits. We've sustained this counter-cyclical fiscal policy in 2013-14. That's going to happen also in 2015 and very moderately in 2016. We understand counter-cyclical policies cannot be permanent, but we do have the space to run those policies over the short term. That comes through letting automatic stabilizers operate. We can allow that, even though we need to generate new sources of revenue into the medium term. We have to work on that as well. And on the expenditure side, we have basically made a push for spending in infrastructure. We've built a very large portfolio of infrastructure, everything within our fiscal responsibility law. There's an exception in the law for times like this. Of course, given the magnitude of the shock, even though you have a structural rule, it cannot accommodate a shock this large. You have to use within the law one of the mechanisms of exempting the rule and then converging over the medium term to the given a trajectory which is set up in a decree. You have to converge back to the limits of the law. So that's the first response. Now the second one is you have to continue working on improving the competitiveness of the economy. And taking decisions on that regard will help you increase the competitiveness, productivity, lift potential GDP growth over the medium term, but it also should have an effect on expectations in the short run, because what's been hit in the short run are expectations. What we did was we requested Congress delegate faculties, which they granted us, and we have just a couple of days ago, we issued the last of 33 law decrees, legislative decrees, issued by the executive branch, aiming, that's 33 on economic issues. There are several others on internal security, which aim basically to modernize and make our investment promotion frameworks even more competitive. Second, our customs law, upgraded and incorporate some other international principles as well that we've been doing over the past few years. We've also had some sectoral laws to help diversify the economy, for example, on the forestry sector, on the construction sector, basically to make them more competitive. So I guess that's the way to move forward. We know we're a country which grows based on attracting investment, so we're working without hesitation on improving our legal framework and taking action on those grounds.
Well, thank you very much, Minister. I'd like to turn to Minister Cárdenas from Colombia, which basically, as you will all see, infrastructure plays an equally important role, and how countries have been adjusting vis-a-vis the challenge that we're facing today. So, Minister Cárdenas.
Well, thank you very much, Luis Alberto. Let me begin by saying, because this is, I guess this is the first public event after you have been re-elected as President of the IDB. Congratulations. We're so honored and so happy. On the issue of the day, which is your question, these are turbulent times, and as the President last night mentioned, all of our countries are facing more challenging conditions. In our case in Colombia, it is the result of a decline in oil prices. Oil accounts for about half of our exports, and in 2013, 1/5 of the revenues of the Colombian government came from oil-related activities. So it's a challenge to deal with a world where oil prices have been cut by half. So what do we have to do, and what have we done to deal with that situation? Well, the first thing, of course, is to preserve confidence, and confidence on the part of consumers, investors, markets. I think that's the #1 goal, build and enhance that confidence. But then the next question, which is the obvious question, is how do you do that? How do you create confidence in an environment which is much harder? And the answer to that question, in my opinion, hinges on the issue of making sure you have credible policies, that you respond to those shocks in an effective way. In our case, we had adopted a framework which essentially is a framework built on the concept of intelligent austerity. So we have to deal with the shock. We have to cut our expenditures. We raise taxes somewhat, and we also allow, because of our fiscal rule, for a slightly higher fiscal deficit. So it's the combination of expenditures adjustments, raising revenues, and at the same time running a slightly higher fiscal deficit. That is a pragmatic response. We just passed the budget in the economic committees of Congress for next year. We're cutting our budget in 1% of GDP. That's a significant contraction. But at the same time, and this is the intelligent aspect of the austerity, we are empowering the private sector to undertake more investments. so that it is the private sector that offsets some of the decline in investment from the public sector. We've been working on a major program of road concessions. We call it the fourth generation. It is based on the scheme of public-private partnerships. So it is the private sector that's going to take the lead in undertaking those investments that will keep the economy growing. That's why Colombia is expected to grow this year at a rate which is about 3.3%, and next year 3.5%, despite the fact that our region as a whole is growing much less. So it is adjusting where you need to adjust, which is the government, to make sure that the private sector continues to expand. A key element is access to markets. So we need to make sure that we continue to have an attractive country for investors, that we, despite these global headwinds, Colombia appears to the markets as a country that is not just reliable, that is credible, but also where there are significant upsides in terms of economic growth. That, of course, requires good credit rating, as we have now, access to capital under good terms and good conditions, and certainly making sure that investors see that our economy is making a transition from high oil prices to low oil prices without major disruptions, that we can make that transition in a way that even though we will grow a little bit less than our potential, we will resume our long-term growth in 2 or 3 years. So it's making sure that there is a smooth transition towards this new scenario. And that's the policy we're implementing, and I think so far, based on the fact that last week, for example, we just issued $1.5 billion in 10-year bonds, and they were placed at particularly attractive rates. I think the markets are supporting us, and we've been able to keep that credibility and confidence. The most important element of the confidence challenge is to make sure that domestic consumers remain confident. I think that's the pillar, and that's something that we have managed to achieve. So it's been challenging, but at the same time, successful transition from these high oil prices to the low oil prices scenario.
Thank you, Minister Cárdenas. And I'd like to turn to Deputy Minister Fernando Aportela. Last night, President Peña Nieto insisted on the word confidence. And Mexico, like Colombia, basically is feeling the impacts of the oil shock. Mexico has had a tradition of basically budgeting by hedging prices of oil, some years with great success, others not so much. But can you, kind of walk us through that? And I know recently you sent, as well as Minister Cárdenas was saying, your budget to the Congress in Mexico.
Thank you, Mr. President. Thank you, everybody, for being here today. As the two ministers were saying, we are living in a complicated environment for emerging economies. So we have taken, and the Secretary Videgaray has taken, bold steps to strengthen the public finances of Mexico. When we saw this scenario at the end of 2014 and the early 2015, we decided that even though we have the hedges for the oil price at $79 per barrel, we decided to make a preemptive adjustment in the fiscal expenditures. So we accommodated an expenditure cut of 0.7% of GDP, which was key to have a trajectory of the public finances that allow us to be on target for the deficit targets that we have for the next future. And this was very important to preserve confidence in the Mexican economy. And to have now, we are in the process of the budget, to have now another expenditure cut of an additional 0.7% of GDP. And this is key to get to a point where we pass from a level of oil prices of $79, $80 per barrel to a level of $50 per barrel. We are having, fortunately, we are having positive effects of the fiscal reform that we did in 2014. And now we have been able in the Mexican economy and the public finances to increase the revenues of coming from taxes from 10% of GDP to almost 14% of GDP, accommodating the reduction in oil revenues from 30% of total revenues in the budget to around 15–20% of total revenues in the budget. That is the kind of strength that the fiscal reform gave to the public finances in Mexico. And as Mauricio was saying, this is not only about cutting expenditures and having more revenues coming from taxes. It's also how do we do more with the private sector and what do we do in terms of having a promotion of investment in the Mexican economy. And for that, we have created, for example, new instruments of new vehicles for investment. One is similar to the MLPs that you know here in the US that we are calling Fibra E, that are for investment in the energy and infrastructures. And the other one are called CERPIs, which is Certificados de Proyectos de Inversión, which are more similar to the private equity industry that is known around the world. Those are the type of instruments, plus an additional effort to have more PPPs that give us this history or story of having more investment in Mexico for the years to come. Thank you.
Thank you very much. And I'd like to, Minister Portela, I'd like to turn to Deputy Minister Mico from Chile. As you all know, Chile is equally suffering from the impact of prices of copper. It's a very important commodity for Chile, and you walk us through a little bit of some of the things that Chile has done, which, by the way, started long ago, fiscal rule and many other things that are today now part and parcel of what the rest of the countries of the alliance are doing.
Thanks. I would like to start that maybe to be here is very important in some sense, because I think that our four countries more or less have the same idea how we have to recover for this situation, how we have to continue to be open economies that allow free trade, that allow free movement of capital in our countries, and that's, I think, are the key issues for growth in the medium and long term. In our current situation in Chile, the price of copper and the slowdown in investment in the mining industry started years ago, and the same in Peru. The things that the investment in mining has been slowing since 2013. So in some sense, Chile already have passed the first part of the adjustment to this new situation in which we know that China will grow a slower way. We will not see any more 10% growth in China. We believe that the growth rate for China will be around 5% in the next year. So the price of our commodities will continue more or less in this level. So in Chile, I think, given that this is the situation for the medium run, Chile started to do an adjustment for its economy. And I can tell this an adjustment similar to the one you see in a textbooks of economics, in terms that the first thing you have to do when you have an external shock, like a fall in the price of your main commodity, the thing you have to recognize that your country is poor. And you have to do, the first thing you have to do is to allow the exchange rate, that is the most important price, the most important market price, to show that. And this is what Chile did in the last couple of years, that the exchange rate started to depreciate quite a lot. And for us, this is a key signal, in terms that this will be the key signal to show the private sector in Chile that they have to move their investment from the mining sector to other sectors in Chile that are, for example, agriculture. And we started to see that more investment in this area. So the first issue that we did in Chile to adjust to this new situation was to allow the exchange rate to go without any problem in the banking sector, without any problem in the corporate sector, because we have good regulation in Chile, good financial regulation, in terms that there are no mismatches in corporation and nor in the banking sector. So this was the first thing. Second, after we start to see that the private demand was slow due to the fact that the price of copper was low, we start this year with a very expansionary fiscal policy. We increased this year the expenditure and about 9% this year. So that was an impulse for the demand in terms that we would like in this year, in some sense, that the private demand that's low was compensated by a more active expenditure by the side of the government. We did that, putting a lot of stress in investment. Public investment increased by 27% during this year. So that's a very big one. But as the Ministry of Finance of Peru told us, this is a countercyclical policy. Then it has to be only one shot, 1 year, and after now we will start to reduce this increase, this important increase in expenditure, in public expenditure, to allow the private sector to start to raise their investment in other sector, tradable sector, not copper. So this is the second point in the adjustment of the Chilean economy. The third one is that the central bank cut the interest rate. Now we have in Chile an interest rate that is in real terms equal to 0. The interest rate by the central bank is 3%. Our target of our inflation targeting is 3%, so we have a real exchange rate of 0. And we are able to do that without any impact in inflation, in long-term inflation, medium-run inflation, because the central bank is independent, and moreover, the central bank has a lot of credibility in the private sector. So we see that the inflation in a horizon of 3 years is still 3%, even though we have a fiscal policy that is expansionary, and we have an interest rate that is very low. So in some sense, we already did this adjustment, and the clear sign of that is that we was able to close our current account deficit from 3% to almost 0 this year. So Chile now, in this day, have a completely balanced current account. So that is the first step to go to this new situation where the price of copper is lower. Now we have to start to put the signals to attract private investment to this new sector, tradable sector. And for that, one issue that was very important for us, in which we have some problem, was energy. And we was able last year to double the level of investment in the energy sector. So with that, we was able to start to invest to have the supply of energy for the next couple of years in good shape. So this is important for the medium term. And finally, we believe that, as in all our economy, one issue that's so important is human capital. And clearly, we have to put to stress investment, public investment, to try to improve our human capital in our country. And for that, we started an important reform in the educational system, as well as Mexico started. So I think these are key issues to have, that in the medium and long run, we will have better human capital, and we know that this issue is so important to attract investment, to attract more growth, to be able to adapt new technologies in our country. So we believe that Chile, in the short run, already did the adjustment. For the medium run, the energy investment is going on there, so the price of energy will be reducing over time, electricity. And for the long term, I think the key issue is human capital, and we are putting on the table an important reform on that, in which we will expend almost 2 points of GDP to try to improve the quality of our education in Chile.
Thank you, Mr. Mico. And, you know, it's clear from the responses of all the ministers that they're entering into this crisis with their eyes open. They know exactly what the challenges are ahead, and they're actually looking at the more tough circumstance. And I think this is really what the markets are looking for. And with that, I'd like to now turn it to Minister Segura again and have him talk a little bit to us. You know, after the meeting in Paracas and right prior to that, you as Ministers of Finance set an agenda. And it'd be good that you share with us some of the things that the Alliance itself is looking to work on, and of course infrastructure being an important element that I know all of you are thinking of working as well.
Thank you, Luis Alberto. Just a matter of a wrap-up, I guess, from the first round. I guess all our countries are basically digesting the shocks already from a fiscal standpoint. And we are implementing sensible policies. We know what are the spaces for fiscal policy response. Of course, at this juncture, we have less fiscal space, and that's what we are at different levels basically internalizing. Going to the questions, your latest question. We launched late last June, at the last meeting we had for Ministers of Finance in Mexico, just before Peru received the presidency from Mexico, with a very, very, very large agenda, actually. The agenda of financial integration, which has basically 4 or 5 axes which we have worked over the past 3-4 months. The first one was financial integration itself, how to deepen our common capital markets, and the decision was to go beyond the MILA, the secondary trading, go into the primary issuance of stocks. And that's something we have been working on. For example, I think Colombia has pre-published a norm in which they would recognize IPOs from other countries. Peru already has that in place for quite a long time now. So we're working on a common platform, common negotiation for IPOs as well as fixed income instruments. We are at the technical level trying to homogenize our legislation, see how to push this forward. I mean, that's the first key area. The second key area is promoting infrastructure, as you were mentioning. One thing that all the countries are doing, even from a fiscal standpoint, is we know we have to spend more in infrastructure. Our budget proposals for 2016, I've seen the budget proposal for other countries as well, prioritize public investment, but we know we have to use the private sector to leverage on those efforts. On that regard, what we've been doing runs on 2 levels. One of them is what can we do to harmonize our legislation to promote private participation in the building of public infrastructure. And at this point, we are working to analyzing, and we're working with multilateral institutions, which are institutions that know better than many what are the legislations in place in each of the countries, to see where we can work in terms of harmonizing those legislations. On that regard, also the countries are moving ahead. For example, Peru, I was mentioning the legislative decrees. We already took a step ahead, and we have modernized our PPP framework and some other mechanisms to promote investments. Also, the law for expropriations, we've made it much more agile, for example, so we can get land to develop to basically go ahead with executing the projects at a much faster pace. So we've been doing that from a country-by-country perspective, but we're looking at what common ground can we get. The second axis of promoting infrastructure is basically what can we do to promote vehicles, infrastructure funds, investment funds that can invest on the Pacific Alliance as a whole. That there's a role there for regulation, for trying to see how can we push for some vehicles there, but there's also, of course, a role for the private sector. I guess the key signal, the key message here is we are countries who have similar views, which have similar needs, and we want to generate more scale, to bring big league investors to a region, which sometimes, even though we're very attractive individually, sometimes the scale might be an issue. But when you have the scale of the Pacific Alliance, you can get these investors to come and look into the region and dilute their transaction costs of coming country by country. That's something which we're working on. There are, of course, another areas of work regarding this. For example, how can we make easier for institutional investors, including private pension funds, to invest across the Pacific Alliance as if they were investing in their own countries. That's also an area we're working on. There's of course an issue of regulations there, which all of us are analyzing as a whole, as a group, and we have a technical group for that as well. And I guess the last two components of this integration from the Ministers of Finance view are how to deal as a group with natural disasters, and there you know, Chile suffered an earthquake just a few weeks ago, and of course all of us immediately expressed our solidarity with the Chilean people. Peru is on the midst of a Niño phenomenon, which can disrupt and severely disrupt, depending on the degree of the phenomenon, economic activities, primary economic activities, and can also affect infrastructure as well. So we are also working on common mechanisms to pool risks across the region. And the last component, I guess, is how to generate more financial inclusion, which is something President Humala mentioned yesterday. And we all have initiatives. Some of our countries, Peru, Mexico, are renowned leaders, worldwide leaders in terms of financial inclusion. So we're seeking ways also to transfer best practices from across our countries and seek to have common platforms as well. I guess that's the broad agenda in terms of integration, which was laid out in June, and we're working now in implementing it.
Thank you, Mr. Segura. I like it. You know, this is a very good and very solid agenda, as you can all imagine. And I like to perhaps take a little bit of some of those areas that were just touched upon and finish this round of questions and by asking Mr. Cardenas about the so-called MILA, which is the integration of the stock exchanges from Mexico all the way down to Chile, and kind of how to use that to mobilize, especially institutional investors, to invest more into a way to actually the risk part of the traditional investment that could otherwise been just on a bilateral basis.
Sure. Well, let me say a word first before I get into the MILA point on the context. The region during the last decade was propelled to a large extent, and this was certainly the case of our four countries, by high commodity prices. So it was the growth of China that was behind our main economic drivers. Many of us were starting to feel, I guess, an early version of a Dutch disease, overvalued exchange rate. It was difficult for the manufacturing sector, it was difficult for the agricultural sector to expand. And this transition to a world economy where there'll be less growth from China, there'll be lower commodity prices, is a transition that we can take as an opportunity to make sure that other sectors in our economies grow faster. And for that, not just we need the flexible exchange rate that is sending the right signal, as Alejandro was saying, that's the right price signal with a weaker currency in all of our countries. This is a common characteristic. Not just building infrastructure, which has been typically a bottleneck for competitiveness, but we also need to have deeper capital markets. Deeper capital markets will help our local firms, including small and medium enterprises, get access to capital and make sure that they can finance their projects and they can be competitive. So the capital markets is essential to this new scenario where there'll be less stimulus from the outside and we'll need more domestic impulse. So the capital markets, it's a natural complement to the trade integration. We have a larger market, more than 200 million people, and of course trade integration is fundamental because that will help our companies reach basically bigger economies of scale. But we also need a more integrated capital market. MILA it's a great effort in that direction. MILA was conceived initially as a platform for the trade of stocks that are already listed in the stock exchanges of Santiago, Lima, and Colombia. We're very happy to see that with the Mexican financial reform, now the Mexican Stock Exchange is also part of MILA. And the next step is that we trade through that platform not just stocks, but also fixed income instruments. And the next idea that we're working on is that we have not just a platform for issuing IPOs, trading stocks, trading fixed income instruments, but also that our local institutional investors can actually participate in the regional markets without restrictions. There are a number of restrictions today that we need to change. For example, the Chilean pension fund industry. Chile has 60% of its GDP in pension savings, which is fundamental for the capital markets of the region. But we need to make sure that the Chilean pension funds can invest in securities in Peru, in Colombia, in Mexico, the same for the Mexican pension funds or institutional investors. This is fundamental to really have a regional capital markets, which is essentially we're following here the model of the European Union. Another initiative is that when we list in our own financial superintendencies investment vehicles, investment funds for investing in infrastructure or in real estate, once you list the instrument and the vehicle in one of the countries, you can actually promote it, offer it, get investors in any of the other 3 countries. That is a deep capital markets integration, which is what we're aiming at, which is fundamental for this new context. With less growth from China, we'll need more endogenous sources of growth. Trade will help us a lot, and a deep capital markets integration will also help us provide the adequate financing to the corporate sector, including, as I said, the SMEs in our economies. This is, I think, the road and the vision for the next decade. This is what really is going to make the difference for the Alliance of the Pacific in the next decade, with less stimulus coming from the outside and more internal sources of growth from our own 4 countries.
Thank you, Minister Cárdenas. Minister Aportela, you know, one of the things that is very interesting that Mexico is really unique is how over the years you've been able to de-risk a set of challenges that typically could face any economy, especially on natural disasters. And as you look at risk overall, could you share, you know, some of the very innovative things that Mexico has been doing, which I really think you've been on the frontier for some time?
Thank you, President. Let me go up first with some of, describing some of the importance of the Pacific Alliance, which is, I think, really relevant for this thing. Together with the economies, we are Chile, Colombia, Peru, and Mexico. We are among the 10 largest economies in the world. We are one of the most open regions in the world, taking imports as exports as percentage of GDP. We are more than 50% of that. We are very, very open. We are all investment grade. So we are more than 216 million in population. So we are a very competitive region as a whole. And we are all committed to macroeconomic stability. We are all committed also with a structural reform agenda. Mauricio mentioned one, which was the financial reform that allows to join MILA. And now MILA, it has a market capitalization of a value of $790 billion, which is the largest in Latin America. So that's the importance of the region, and that's we are countries that have the similar view on how we should conduct, or we must conduct public finances, and how we approach the private sector, and what should be the policies that we allow in our countries. And in this sense, we have done lots of efforts in Mexico, for example. As President Moreno was saying, we have been working for years now in how to ensure catastrophic risks. We have an initiative for many years now which is called Fonden, which is a trust in which we have public resources there, and that trust actually allows to secure or to insure different type of risk across the region. We also have a catastrophic bond, which is the one that Alonso was referring to, and we are trying to make this more using the markets, the capital markets, to try to sell this risk to the markets, and that's something that has been useful in terms of securing roads, securing public facilities, and that has been an important effort. And this is all done in an environment in which we continue to try to adapt our legal framework. For example, going back to the financial reform, that has given positive results in terms of in terms of credit intermediation into the economy. We, in December 2012, private credit to the private sector was only 25.7% of GDP, and now we are above 30% of GDP. Those are the type of the results that we are achieving over the medium term, and now with the Pacific Alliance and going into these more integrated markets, now with this next step of allowing the IPOs in each of the countries to be sold in each of the countries, to be recognized by all the authorities in the countries, for sure will give an additional boost to the markets in the region.
Thank you, Minister Portela. Finally, with Mr. Mico, you know, one of the big things that one observes is, and something that Minister Cárdenas was saying, we have almost $450 billion sitting in pension funds in the 4 countries of the Pacific Alliance. Yet, few of those pension funds are investing in infrastructure. Of course, Chile was the first country to start the dual system. And I'd like to hear you, what are the things that are needed to begin to see that how to assure that those mismatches that exist can see more of a flow of our local pension funds into infrastructure investment?
I think it's very important to start with the point that for investment and pension fund investment, the most important thing is stability of their countries, where you're investing. And I think that is exactly what the Pacific Alliance is, to have the rules, clear rules, that makes that the countries become more stable. Therefore, we have more opportunities to invest in long term in our countries. And I think this is the key issue more than the small regulatory issues. And I think it's the commitment of our countries to have stable rules for investment from abroad. And I think that these are key issues. There are some issues about the regulation in terms to facilitate that our investment from one pension fund in Chile could be invested in other countries, taking the similar rules that we have in our own countries, taking into account that the countries in the Pacific Alliance are countries that are committed with free markets, are committed to have a stable capital market, to have a stable, open economies. And I think these are the key issues, because whenever you allow a public pension fund to invest in other country, you have to care about the stability of the money of the workers of our countries. And for that, the key issue is the stability in the country where you are putting the money. I think this is the key issue, and this is why in Chile we put so much importance to this alliance, in terms that we are countries that we have some difference in regulatory issues, but clearly we have commitment to the same north of open economies, capital markets that are open. In terms to allow investment from pension fund to an infrastructure, clearly we need to develop more that the instrument fit exactly with the requirement on pension funds. In Chile, we have the experience that many of our pension funds invest in bond issued by some private corporation that build infrastructure. So we have to be able to have more standards contract, in some sense, to be able to, for the pension fund to see that they have more or less the same characteristic and they make much easier to invest there. Our 4 countries are investment grade, that are conditional, a very important condition that we have to keep, of course. And coming back, I think the most important thing is the commitment to free movement of capital, free trade, and to have institutional setup that's allowed to have sound macro policies. I think that is the key issue, and I believe that these are the key issues for investors, not only for Chilean investors, but for all investors around the world. I think that these things are starting to work. We see how some important companies, Latin America, from countries like Colombia, Peru, start to invest in Chile, the same way Chilean companies started to invest in Colombia and in Peru. And I think that shows that we are able, through facts, to have more integration in the capital market. We need to move now some regulation, but I think we started to see important movement from the private sector, and we as government, we have to help to make this decision more easy and to allow this FDI, cross FDI across our country to be more easy to do.
Well, thank you very much. I know our time is up, but I clearly want to point out we all can see that there is big challenges ahead, not only judging by their immense technical capabilities. All of these ministers have gone to have PhDs in U.S. universities, in the best ones, but they're really a safe pair of hands for that one knows that they're going to be able to go through these tough times. And I know that we all have in the Alliance of the Pacific a conviction that good economics is what really brings people out of poverty and they progress. And more importantly, what they really learned came sometime along their way when they spent time at the IDB. So thank you all very much.